All right, so a little bit about us. First off, I'd like to thank FFCON21 and everyone who's joining me this afternoon for this session on opportunities in fintech, brought to you by InvestHK. My name is Christopher Chen, Head of Investment Promotion and Country Lead for the InvestHK presence here in Canada. One of the things that I wanted to make clear to everybody is that Hong Kong obviously is not an investor. We are a gateway to the world's most dynamic region, i.e. Asia Pacific. And whether it's China, Southeast Asia, North Asia, Hong Kong is the entry point of choice and the easiest way to gain access to business opportunities and capital in a region that basically has bounced back quite well from the COVID-19 pandemic. Of course, that goes country to country, but by and large, East Asia and Northeast Asia, North Asia has done relatively well. So a little bit about Hong Kong's role as a financial center. Hong Kong, for you may or may not know, Hong Kong came into its own roughly in the 1960s. At the time, Hong Kong, during the height of the Cold War, started to becoming a financial capital due to its unique position in history as an entrepot between East Asia and the Western world. Today, it is one of the great financial centers of the world, along with New York, London, Singapore. It is the gateway to China and the springboard to the rest of Asia. Its geographic position, centered in the middle of Asia, greatly contributes to its role as the starting point for many Canadian companies when they first come to Asia. The gateway role to China is not to be underestimated. It has led to the largest deal flows in Asia and the largest capitalization in the world for new listings. It is true that the outward renminbi funnel that Hong Kong serves is a boon to the financial services industry as of today and directly benefits the banking and asset management industries. I'll just cite that 70% of all outgoing renminbi from China gets funneled through Hong Kong. And foreign capital entering China also gets funneled through Hong Kong. So what that has actually created is that Hong Kong has the world's greatest concentration of renminbi investment expertise and capitalization in the world. It is the dominant gateway to all things China. It is a competitive international financial platform. It is the leading private wealth management in Asia, and I'll talk about more on that later. And it is an ideal environment for fintech and family office operations. But the story of Hong Kong can't be separated from the concept of the Greater Bay Area. The Greater Bay Area is an economic super region centered around the Pearl River Delta. It is a conglomeration of 9 cities, 9 Chinese cities, plus 2 special administrative regions being Hong Kong and Macau, that effectively has the same GDP as Canada. It has, right now, the GDP is about $1.7 trillion US. In less than 10 years, it'll be 4.6 trillion, effectively overtaking Japan. It has a population of about 70 million people. And although there is a border that separates Hong Kong, Macau from China, there is in existence something similar to a nexus pass. So anyone from one side of the border can effectively live and work in another. So in the future, when we talk about the Greater Bay Area, we will be treating it as a pseudo country unto itself, with its own financial regimes, its own capitalization, its own market. So Hong Kong's future in that as the starting point for this pseudo country is not something that anyone should be ignoring. So a little bit about Hong Kong's bench strength in detail. It is the world's leading capital market. It's #1 in terms of IPO fundraising. That goes to say that it focuses a lot on secondary listings for companies that already have listed, somewhere such as the NASDAQ, New York Stock Exchange, and London Stock Exchange. It is the world's largest offshore renminbi business hub. It is #1 in terms of insurance, banking, and asset management. if there's one thing that Hong Kong is not number one, and we fully admit that, is that it runs neck and neck in terms of private equity and venture capital with Singapore. But with new policies in place since August of 2020, the initiatives towards private equity and family offices has increased by quite a lot. So in terms of the financial services opportunities in Hong Kong, and I will be getting onto fintech, so don't worry. In terms of the financial services opportunities, there's about 750 asset and wealth management companies, and this was cited back in early 2020. So there's actually more now, and there's about 7.6 trillion assets under management under Hong Kong dollars. There's about 160 plus licensed banks with 8 virtual banks. We're talking about a place that has a population of about 6.5 million people. It's really a city-state when you think about it. And to have 160 licensed banks there means that the concentration of all the countries of the world's banks happen to be in one place is rather symbolic and representative of the economy as a whole. There's 162 insurance companies and 2 virtual insurance companies. So basically, what this has done is that it's created a legacy for companies in the fintech space to leverage a lot of, you might say, champions or parent companies to join forces with. Hong Kong, it's no secret that Hong Kong comes from a financial services background. So when the time came, roughly about 10 years ago, for the government to modernize, to innovate, to diversify itself away from financial services, away from the other traditional industries such as business and professional services or logistics, fintech was a no-brainer. There's such a huge legacy, a huge history of financial services companies to leverage technology into a pre-existing economic fundamental was pretty much a no-brainer. So with that, I mean, there's numerous new government strategic initiatives when it comes to financial services. I won't go too much into the first 3, which is basically renewed emphasis in real estate investment trusts, renewed interest in equity funds, a new interest in promoting family offices. But the last 2, which is fintech development and in essence, rejuvenating the financial services industry, because after the turmoil that Hong Kong has been going through for the last 2.5 years, the financial services industry did take a bit of a hit, and a number of people were laid off, and number one priority is getting those people back to work. The other priority is actually, like I said, fintech development. There is a number of official financial incentives and initiatives for financial institutions to partner up with fintech companies. And it doesn't matter where these fintech companies are coming from. It doesn't matter if they're local, if they're Chinese, if they're from Canada, or the United States, England, Israel. What matters is the idea. What matters is the viability. So the idea is that the government is fully in support of partnering up these 160 insurance companies, these 160 banks with viable fintech innovations to put them into Hong Kong and to use Hong Kong as a launch pad to grow these companies beyond Hong Kong to the rest of Asia Pacific. So one of the core initiatives, one of the core building blocks of the government strategy is the Innovation and Technology Venture Fund. This is a 315 million Canadian dollar VC fund that's effectively built by the Hong Kong government and overseen by a combination of 9 private equity firms, 9 private venture capital firms, as well as a number of agencies of the Hong Kong government that are specific towards technology and innovation in fintech companies. InvestHK happens to be one of those agencies, as well as another InvestHK agency called Start Me Up. A number of Hong Kong government departments such as the Monetary Authority, the Insurance Authority, the Securities and Futures Commission are also agents of disbursement for this technology and venture fund. There's also a number of technology campuses that run a portion of this fund, and they run it as their own seed fund. There have been about 3,000 startups that have been recipients of some sort of funding, one type or another, whether big or small. And these startups actually range from a number of industries, such as, say, fintech, health and life sciences, data analytics, hardware, biotech, and so on. The Hong Kong government funding scheme actually runs the whole length of a company's development lifecycle, from the beginning of a setup all the way to what we call overseas expansion, which is basically when a company is ready to grow beyond Hong Kong and wishes to tap into the markets of North Asia, China, and Southeast Asia. So I won't go into this chart specifically, but you will, from a casual glance, you will note that the numbers actually increase the further along the life cycle funnel that you go. In other words, the money is smaller the younger a company you may be, but as the company becomes progressively larger and older, suffice to say, the more confident the public sector has in your company. This is actually a philosophical difference from, say, the Singapore approach. The Singapore approach is relatively different, where the amount of funding poured into a company pre-angel funding, or almost in the paper stage, is a little more generous when it comes to Hong Kong. Hong Kong represents a reverse of that belief, whereas there is a bit of a risk aversion towards companies that are still not there when it comes to, say, the proof of concept stage, but give the company 1 or 2 years of growth. It's passed several stages of funding. It's ready for expansion, and the Hong Kong investment philosophy, the investment tolerance grows, whereas so as to the point where a company is ready to expand to, say, Southeast Asia, and they apply for export marketing or brand building across the borders, the more likely you are to receive a larger pot from both the public and private sector. So according to this chart, you will see there's a number of funding for R&D as well as hiring, but that is usually given to companies that partake in research and development. When it comes to business development, fundraising, and overseas expansion, the field significantly grows larger, and the amount of companies that apply for this actually does widen. Hong Kong has a number of building blocks for growth. For example, we have a robust ICT infrastructure. It is pretty much a wireless country, similar to, say, South Korea or Taiwan. The talent resources are rich. There are a number of top-ranked universities. There are a number of government policy incentives specifically meant to further along innovation and technology, and the research capability and applied sciences capabilities of the government or pseudo or semi-governmental organizations is quite large. There's a number of technology transfer labs. There are a number of applied science labs, and there's a number of technology campuses that function as both incubator and accelerator and investor for companies that are entering into Hong Kong. And when we talk about companies that are entering into Hong Kong, it's not necessarily a startup. When even a large company here in Canada, when they go to Hong Kong, technically you'd be classified as a startup, because you generally just start with 1 or 2 people at the very beginning. So talking a little bit about private capital, because the previous pages were exclusive towards the public sector. In terms of venture capital investment, that has grown substantially over the last several years. It has slowed down a little bit. It slowed down a bit back in 2020 and 2021. So because the lack of deal, or the slowdown in deal flows thanks to the pandemic has created an effect. But basically, over a period of 5 years, about USD $1.5 billion was poured into companies from 2014 to 2019, and about 12 billion, 1.5 billion was actually poured into fintech companies out of a total of 12 billion poured into innovation technology companies in total. So fintech received a very large chunk of that 12 billion total. In terms of IPO fundraising, the Hong Kong Stock Exchange has been actually number one 7 of the past 10 years. This is slightly out of date. And that again is because of secondary listings. A number of new initiatives that may be of interest to Canadian companies here. The first one I'll talk about is called the Global Fast Track, and this is actually run by InvestHK itself. And so basically, this allows companies that are actually not in Hong Kong to apply for new business opportunities. It's basically a type of overseas pitch or a type of one-to-one matchmaking companies. So basically what happens is that for a company who wishes to apply, let us know, and tailored meetings will be arranged according to the verticals and interests of both the fintechs and corporate investor champions. And I will show you a list of those champions as it was standing as of earlier this year. The strongest applicants are then invited to pitch to corporate and investor champions across those verticals, and the winner of each vertical is announced during Hong Kong Fintech Week, which is every November. And hopefully this year, Hong Kong Fintech Week will be an actual live event. The Fast Track Village is actually a way for companies to, who even if you aren't the winners, basically you enter into a networking ecosystem, networking facility with those champions nonetheless. So it's not always the winners that always come out on top. It's if you have a good idea and you get yourself noticed during this in this ecosystem, there's a good chance that you will be picked up by either a corporate or one of the public initiatives. So the Global Fast Track program has for a program that is just new. It's actually formalized in 2020 and morphed from a semi-formal, unofficial sort of corporate matchmaking process that had been running for years. So we had about 300 fintech applications with 45 different countries represented. We had 67 semi-finalists based around 130 one-to-one meetings. So in terms of champions, I'll just cite a number of these. Allianz Global Investors from Germany.
Christopher, can you hear me?
JP Morgan, Hang Seng Bank, UBS Societe Generale, RGA, the reinsurance company. Basically, we are accepting applicants for Global Fast Track. It is coming to a close, but even if you miss it, even if you miss the formal deadline, it doesn't necessarily mean that you have to wait all the way till next year. Basically, it just means that this year's cohort is closed off for consideration, because basically it then goes under a number of months of screening and presentation and development of proof of concept. So we always ask for companies who we think that are viable for entering the Asia Pacific market to check in with us to see if you can get into the Global Fast Track program. And again, this is an InvestHK program. Another program is run by one of our a sister agency called the Financial Services and Treasury Bureau, along with Cyberport, one of the tech campuses, and that's called the Proof of Concept program, where basically it is somewhat similar to the Fast Track program, except that it's run by a different organization, but it runs till beginning of June of every year. So if you want to apply for this one, we also recommend that you get in touch with us at InvestHK. We can point you to the right places. There are also a number of official sandboxes run by the SFC, the Insurance Authority, and the Hong Kong Monetary Authority. The Security and Futures Commission is running a sandbox purely for compliance. The Insurance Authority is for InsurTech ideas, InsurTech proof of concepts, and the Hong Kong Monetary Authority is for banking and general fintech ideas. The catch for these three sandboxes, each one comes with their own funding, is that you actually have to be in Hong Kong to do it, but you can be what can be classified as a startup. The last big initiative is actually Hong Kong Fintech Week, which is actually Asia's largest fintech event. In terms of participants last year, they had about 12,000 actual attendees and 1.2 million viewers because it was entirely virtual. We hope that this year it won't be entirely virtual. We do hope that it's a combination of both virtual and live. It is held in November, and we do recommend that for any company that is desiring to go into Asia, that you make this an essential part of your first forays. By taking part in FinTech Week, there is an ability to cut through the chaff because there are a lot of attendees. Get in touch with us at InvestHK, and we will do our best to get you in touch, to put you in touch with the investment champion of your choice. So just going back to the GBA, the top motivations expanding GBA is overall, it's access to the larger market. We're talking about a economic region of 70 million people, a 1.7 trillion GDP. Where there's a number of new policies to help you navigate the GBA. I won't go through all of this in entirety, but basically there is an ability to go across the border, somewhat similar to the Nexus Pass. If you are a resident of Hong Kong or you're a resident of Shenzhen, there's the ability to live in one city and commute to the other side of the border, and all your authority, all your insurance, your taxation, your right to abode will be observed by the other side. I will finish off with just talking about InvestHK for a little bit. As stated before, we are a bureau of the Hong Kong government. What we do is that we don't just help you set up in Hong Kong. We actually facilitate the new business opportunities and conversations you would need to grow your business. It doesn't take much to actually register in Hong Kong. It actually can do it in a couple of hours. It doesn't take much to set up an office in Hong Kong. What it is challenging is actually to do well in Asia Pacific, because it is, again, it is a dynamic, fast-moving place that is extremely hyper-competitive. It is a fantastic place to do business, but the stereotype that it depends on who you know is absolutely true. And so using Hong Kong as your entry point, using InvestHK as your entry point to get into Asia, to allow us to knock on the doors for you, is what we consider an essential service. So whether it's an ecosystem partner, or you need to hire people, you need to get in touch with international associations and consulates. If you want to get in touch with another government, say the mainland Chinese, the Japanese, and the Singaporean government. If you're in fintech and you need a license, or you need to find a market player, such as a distributor like Ernst & Young or PwC, or you need a champion to partner up with, or to potentially sell your service or product to, let us know. It is always easier for us to knock on the doors to do it on your behalf than for you to do it yourself. And we do that for free. So a little bit more about us in terms of who we are. There are about 200 companies of Canadian origination in Hong Kong, and there's about 700 companies that are run by Canadians unofficially. Of those 200 companies, we put 170 of them there. 170 of them went through us, whether they were small startups or they were large companies such as Manulife Bank or RBC. or Intact Financial, which is a new one we just did about a year and a half ago, it doesn't matter your size. What does matter is your intent and your commitment to entering the world's most dynamic region. So let me know. This is my contacts. You may want to write this down or just screen cap this. I think I've run out of time, so I'm not sure I'd be able to answer any questions. But if you have any questions about entering Asia, or you just want to know more about it, drop me a line at this email, and I'll do my best to see what I can do. Thank you.